All right, guys, Alibaba is down over 70% since the all-time high, but they do have their earnings report for full year 2022 and Q4 set to release on May 26th. So in this video, I want to give you an update on the Baba stock and let you know where I'm at with it. I'm going to go over kind of what we can expect with the upcoming earnings report. I think it has a lot of potential to act as a near-term catalyst. I'll also go over the chart with you, give you my thoughts on where I think the price is headed from here, and then we'll jump on that discounted free cash flow sheet so I can show you what my price target is or my intrinsic value of where I think the stock should be at as of today. So let's jump right in. What's up, guys? Welcome back to This Just In. Thank you so much for joining me today. My name is Justin and I am your host. I know it has been a very long time since I've posted a video, guys, but just been going through it. You guys know how life goes. It comes at you quick. I apologize for that, and I'm going to try to be a lot more consistent moving forward. Day One Squad, thank you so much for sticking with me. I love you so much. You have no idea how much I appreciate it. In today's video, guys, we're going to give you an update on Alibaba. I love this stock. It's still one of my biggest holdings in my discounted free cash flow sheet. I still buy it every single week, no matter if it's high, low, or wherever. They have their earnings report coming up, and I think this is going to be one of the most important earnings report for Alibaba in a very long time. It is a great opportunity for them to give investors confidence that they are able to recover from the just absolute beatdown they've taken over the last year. Like I said, guys, they're down over 70% since the all-time high. So I wanted to jump on and take a look at that chart and give you my thoughts of where the price is headed from here. Real quick, guys, before we get started, subscribe to the channel if you're new around here and you want to see more videos like this, and come join us at the Patreon if you want to see all of our trade setups. But let's get started. As I said, guys, we've got the earnings report coming up on May 26th. I think that they've had a lot of reasons to imply that this could act as a near-term catalyst. First thing being, guys, they've had downward revisions. The lockdowns in China has been just brutal, right? So they've revised their forward guidance downward. So I think they have a good chance of posting better than expected full year 2023 guidance, which you guys know how important guidance is when releasing earnings for these big companies. They can do exactly what they need to or meet analyst expectations on their earnings, and their revenue growth, things like that. But if their guidance is weak, it's beat down time. So I think that they've got a really good chance. They are set up to post much better than expected forward guidance. Not to mention, guys, the year-over-year comparisons are extremely soft. If you remember correctly, in the same quarter for 2021, they had that big $2.8 billion fine, which pushed their earnings in the negative. So when you look at the comparison from last year to this year, I think the comparison is soft, and I think they have a good chance of meeting or slightly beating or being right there in line with the expectations. So all of those things coupled together, guys, with the chart starting to show signs of seller exhaustion. And then also when you take a look at their web traffic from this year, Q4, to last year or same quarter of last year, 2021, they've got much more traffic to their actual site. So I just think that, guys, Shanghai's set up to open back up on June 1st, and get back to normal life, at least they say. Those restrictions in COVID or in China for the lockdown has just decimated their economy, and they are trying to stimulate growth moving forward. I'm always going to jump back to the discounted free cash flow sheet, guys. Don't get me wrong. Alibaba is down over 70% since the all-time high. But guys, that's the stock price, not the company. When you look at the company fundamentals, when you look at the discounted free cash flow sheet, I come up with, $178 on the high end of what the stock could be worth today. That's with using a 10% growth rate year over year for the next 5 years. They are projected and guiding to do a little bit more than that. If we drop that down and we even be pretty conservative at 8%, that brings the stock price down to $163. I actually think that $160, $170 range is exactly where the stock should be at. And over time, the stock price and the intrinsic value will sync back up. And I think this will do very well as an investment if you are buying it at these lower levels. Like I said, guys, the discounted free cash flow sheet is what I stick by when I'm using a value, approach to investing. When you look at the free cash flow margin, I've got it at 15%. That's exactly what they're doing right now. Now, let's jump over to the chart. I want to give you my thoughts of where the price could be headed from here. Because guys, we are starting to see some seller exhaustion. We did see something very similar back here in December, January, February, December 2021, January, February, March of 2022. Then, you kind of had that buy wall, right? Where it was kind of bottoming. We thought the stock was going to start, recovering because it was hitting those highs and that initial all-time high from November 2014. However, it did break that level and it went down to the next zone. So, however, though, guys, if you notice here, you're starting to getting that shortening of thrust, right? So you have that initial drawdown, you get that rally back up to make a lower high than the previous high, but you're starting to get those higher lows. You were making the same low back here in January and February. Now you're actually starting to make slightly higher lows. If you take a look at the oscillators as well, guys, you're starting to get that classic bullish divergence. Not to mention, you're also rejecting the bearish control zone and you're starting to get back to at least neutral. One thing I want to point out, guys, right back here in January, you rejected that bullish control zone like nobody's business, just perfectly right there, dumped right back down. However, now you're starting to show signs that sellers are exhausted when you did not show signs of that previously. If you take a look at the chart, guys, these are pretty crucial levels. This is that initial low from back here in November 2014. It was the highs from back in November 2015. And then if you take a look here, when it broke that zone and back tested the 200-day moving average as well as the zone before running to all-time highs. So this area right here around that $86 to $81 range, I think is like your wall of steel that is going to be very hard to break. Every time it's broken it, it's jumped right back above it and back tested it as support. You can see it's kind of getting like that spring back test to spring type stuff. Don't get me wrong, guys. There's still risk, right? You could absolutely break down through that level and go down and see 57 bucks. However, I do think that we are at those points where we are starting to see the bottom being put in. I don't think it's going to turn around and all of a sudden just start ripping to the upside right away. However, I do think that this earnings report could get them into a position where you start to get investor confidence back, and it could get them up to the next level over $100, 110, 120, around that area. If we can get back above that 110 level, guys, you can see that initial high. That's where I think we can really start to repair or, get back some of those, devastating losses that we've experienced over the last year and a half. Again, this is still my biggest holding in my dollar cost average portfolio. I still buy it every single week. It's like 8% of my overall portfolio. So I plan on doing that and will continue to do that, moving forward. Again, guys, we're starting to get that first low, and then you actually got the rally, tested the level as resistance, and then you came down again and you got that weekly hammer, down here at that critical inflection zone. You're losing your negative momentum. You're starting to build positive momentum. You're getting up out of that bearish control zone, or at least you're trying. So guys, I think that right back here, you never got a big enough rally off of those levels. You kind of just sat there and consolidated. Here, you broke the level, you jumped right back out of it, and now you've got that defined confirmation low, initial low, confirmation low, before trying to move back up. Overall, guys, Alibaba, in my opinion, is a $160 stock. Take it for what it's worth. Let me know down in the comments what you think about it. And also let me know what you've got as a overall price target. Guys, that's it for today, This video is for entertainment purposes only. I'm not a licensed stockbroker. Always do your own research and due diligence. And come join us in the next one if you want to see more videos like this. Love you guys. Have a wonderful day. Peace.